Hi guys, today we will discuss accumulation and distribution on the monthly chart through OBV. Now, you might have heard, or many of you won't have heard it, that in the hedge fund community, mutual fund community, institutional investor brokers community, you will always hear the phrase pump and dump. Now, what does pump and dump means? Number one meaning is what the general public knows, that you buy the stock lower and you dump it on a highest point. Now, if you look at it at the OBV, it's a perfect indicator to gauge pump and dump. Now, I have put the chart on 1 month chart. That means this one candle is 1 month. This one candle is 1 month. Now, this is Citigroup Inc. Now, as you can see, it took double O, let me make it big, right here. It took double O that we discussed earlier and then rose, right? Now it's a monthly candle. So right here it's 94 November and this high is 98 June. That means approximately 4 years. And what do you see? You see that it rose, then it went lower and then it came back. Now once it went lower, right here the big money would have got stuck. But once it came back up, right here you can see that the OBV is stuck in between 2 points. Let me make them for you. Right here, number 1, the highest point, and number 2, the lowest point. It is stuck in between them. Now whenever it is stuck, it means something. It means either accumulation or distribution. Now in an accumulation, you usually accumulate by buying at the bid price. At the offer price. Now once you are buying at the offer price, the price usually rises up. So when you have bought it here, let me make it big. Yeah, here 95 February, the price would have run up, going again further rising up. Okay, but right here the price is rising, but the OBV is not rising. Why? From here, this is the highest point in OBV, then it dipped, the price dipped, then it rose up, but the price rose up huge, but the OBV didn't even cross its previous high right here. This is the high. These two highs were never crossed. What does it tell you? Distribution. If I would have owned Citigroup, let's say 10%, or among brokers, let's say we 10 brokers have owned 20% of Citigroup, and our buying rate is somewhere here at 70, and now right at this point we are getting 374. So we won't be just jumping around and throwing our stocks, because if you'll throw it, nobody will buy it and the price will drop just like a needle from highest point till the floor. What will we do? We will let the price rise. We will make sure that the price is rising. We will distribute news that says Citigroup is the best stock ever. And in those distribution of news, we will be selling. Now, if you look at it, this is the S. This means stock split ratio. That is, one stock was split into 5. This is again S. That means another split. But if you look at it from the first split till the second, the major players, institutional investor, would have already known that the stock will be split further. So they are selling it before that and distributing the news that a stock split, another stock split is in the offering. Now people assuming that since this stock split, the price have risen from 331 till let's say 528, they are assuming that it will rise further. But if you look at the OBV, the major money is going out. It is extremely going out. Even after the split, the people, the institutional investors, the brokers who are still stuck are still getting out. See, this is 2001, the dot-com bubble. They were even selling it before that, before the bubble. And boom, it went lower. Now, if you read the dot-com bubble, you'll hear that the speculation roughly from 97 till 2001. And if you can find the date, here, January 10, 2000, March 10, 2000, March, Nasdaq peaked at 517. So after March 10, it fell off. This is March. If you look at it, even though the market was going down, Citigroup was still rising because they had spreaded the rumor of a stock split, which was true, which was not a rumor. But the point was, they knew that the market was going down. Even though Citigroup would have been a best share ever, best stock ever, but they will be selling it, even though they knew that the market was going down. Dot-com bubble is set to burst. They knew it. See, it says 78. It fell 78% within the next 30 months. Now, 12 months is a year. 24 months is 2 years. So it means 2.5 years means 30 months. So from March 2000, 2 years would be March 2002. Right here. If you look at it, after 2 years, it was still trading at the same rate. Since March till the next March 2002. Within these 2 years, the price remained the same because it was allowing the institutional investor to get out. People were throwing dot-com stocks and were jumping into safe havens like Citigroup. But what they didn't know that the trap was ready. And that's why I always instruct my students. Always look for the monthly chart. Find vulnerabilities in it. Because if on the monthly level you are seeing something wrong, then this means that whatever dumping is happening on the monthly chart is done by sponsors. Because sponsors are the one who have the long-term view. Because they already hold huge size of the company and they cannot simply sell it. So they are always looking at the long term and using options to square off the risk or reduce the risk because they are sponsors, so they simply cannot dump their stock. They might get caught in the insider trading, but they can use options to earn money or reduce their exposure. By selling an option, let's say for 6-month price, they can buy the option again at the lower price and save themselves the money in between. And even if you forget about the sponsors, look at hedge funds, look at mutual funds, look at long-term investors who invest in companies, let's say Warren Buffett, for years after years. And right here, after 2 years, the price was same. Even though the Nasdaq was going down, down and down, still the price was same of Citigroup. But if you look at OBV, it tells a completely different picture. It tells you that people are getting out, institutional investors are getting out. And what happened? Let's see. Right here, it has broken the line I have made. This low is the line. Even if I make it these lows line, this is June 2002. Let's look at June. April, May, June. See? In June, once everyone had sold here, let me make it big. This is the lowest number. Yeah. This is 3772. And this is 3800. This is 3820. This is 3803. So right here, it had broken all the lows. 2002 May. And let me find 2002 May right here. At 4:31, every institutional investor is out, and only the retail investor. The retail investor is stuck in. From 4:31, they makes the price drop to 244. Approximately 50% drop, 40% drop. Huge drop. The price goes within 2 months, this much drop. Why? Because they were distributing it from 99 April. The first phase was 2000 August, and then 2001 December, and boom, the price from 2000 December went lower. They were selling at every high, and then they put the general public in doubt and get the price to crash. This is the learning point. Even if you look at 2008, right here it's a double low, so again the institutional investors tried to bought in. From 392, they rose the price up, and then the price dipped. This is 2007 September. This is September. And this is October, right here. If I make it big and go for October, it says that the OBV is right here at 472.60.14. Now this is a major low. It should not have broken it. And it did broke in October. Now let's presume you don't believe in this rate. This is November. Let's make it big. And let's find September, October, November. It is right here. If I go a bit back in October, it is 472.601. This is 455. Right here. In November, the OBV is standing right here. If you look at it, it has broken this low, this low, this low, this low. All 1, 2, 3, 4. And if you consider this, 5 lows are broken. And it is already standing right here. It's November. And look at the price. If I come here in November, the price is here, 333. And then where do I find the price? $9.70. $9.70. That's huge. That's huge. But if you look at the OBV, it was telling you in October. It was telling you in September. Something is seriously wrong. In November, it was like all hell loose. It broke all the lows. Look at it. You can see the date right here. This date is November. If you go 1 month back, this is October. Even in November, you could have sold it at $333. I am again repeating, $333. November 2007. And this is 2009 March, $9.70 low. That's huge. That's not even 2 years. That's 1 year, 6 months, approximately 18 months. And in 18 months, it dropped from $333 till $10. That's huge. And why? Because you can see the OBV telling you before time that institutional investors sold. And just look at the volume. You will see a complete different picture. We are saying November right here. In November, the volume is rising. If you look at it, before that, this is June, 67 million. This is August, 105 million. Then September, 61 million. October, 121 million. And November, 262 million. Now, why is the volume rising? Because institutional investors dumping. they are dumping at every rate. The volume is increasing because the general public is buying. They don't know that they are getting sucked in to a loss-making trap because they don't trust OBV. And that's what I want to show you. Look at the OBV. I'm not saying anything special. I'm just telling you the bubbles. You know the bubbles. It was .com bubble right here this fall since 2000 May. And then there is this bubble since August or September, if I'm not wrong. And it dropped. It dropped hell loose. It didn't drop so much in .com bubble. But my point is not about the drop, how much it drops. My point is saving yourself. OBV was telling you before time. And this is the power of OBV. You might trade some other indicator, but you should be considering OBV as your lifeline. Because other indicator would still be saying there's a buy signal, buy it. Don't buy it. Look at the monthly signal. It tells you the long term, the crisis. OBV tells you the crisis on the monthly level. Here it told you about the .com bubble crisis. Let me go back right here. This is the .com bubble crisis. This is the 2008 crisis. And it showed you that what happens at the crisis. And after that, what happened? The OBV rose again, not looking back. Even though the price is only 73, but if you look at it from this level, since 30 it's like 60, 70. It is rising. That's my point. That is exactly my point. You have to learn the game. And OBV helps you save your money from exceptional crises. And I've just showed you two major crises. Thank you.